Hi everyone, this is Paul, and welcome to Connecting the Dots. With this channel, I'm hoping to create a place for people to dork out about anything business and finance related. I've never made a video before in my life, but I feel the best way to learn is by doing. Today we're going to take a look at how the integration between Square's seller ecosystem and Cash App via QR codes is worth billions. Before we go any further, I want to mention I'm not a financial planner. This is not financial advice, and a significant portion of my portfolio is in Square stock. So let's check out this announcement from Square. On September 13th, 2021, Square announced that Square sellers will be able to accept payments through Cash App Pay, which is a contactless payment method for both online and in-person transactions. With Cash App Pay, consumers can seamlessly pay with their Cash App account at participating Square sellers for both in-person and online transactions. Customers simply scan a QR code at checkout or click a button on their mobile device. And to understand why this announcement is important, we first have to understand how the current credit card payment ecosystem works and who the players are. To do that, we're going to check out this article by Neil Smulin. On the left-hand side of my screen, you can see the general structure of the ecosystem. On the right-hand side, you'll see the definitions of all the different players. In this example, Square would be considered an independent sales organization, also sometimes called an aggregator. Let's run through a hypothetical example of this ecosystem to better understand it. Let's say you want to buy a coffee from Sally's Coffee. In this example, the merchant is Sally's Coffee, the store that you want to buy the good or service from. The cardholder is you, the person or customer who wants to buy the coffee from Sally's Coffee. The card issuer, also known as the issuing bank. This would be the bank that you applied for and received your credit card or debit card from. For example, it could be Wells Fargo, Citibank, US Bank. The card network. This is a network that allows all the different stakeholders in the ecosystem to communicate with each other and facilitate the transaction. For example, Visa, MasterCard, Discovery, these are all card networks. The merchant acquirer. This is a financial institution that communicates with the card network on behalf of the merchant and collects the payment from the card issuer, also known as the issuing bank, for the merchant. Merchant acquirers are liable for the transactions, and because of this, they typically submit merchants to an underwriting process to make sure the merchant is truly selling the types of products they say they are and is trustworthy. This is important because different types of businesses have different types of risks associated with their transactions. So they'll typically charge a merchant based off the type of business they have and the types of transactions they do. For example, online transactions are deemed more risky than in-person transactions. Merchant acquirers are oftentimes banks as well. For example, Chase Bank is a merchant acquirer. Lastly, independent sales organizations, also known sometimes as aggregators, and in our example would be Square. Now you may ask, why would a merchant go through an extra layer like Square rather than working directly with a merchant acquirer? Beyond all the different services and softwares that Square offers, the main reason why someone would use an independent sales organization is simplicity. Using Square gives you access to their merchant acquirer relationship without having to go through the whole underwriting process that a merchant acquirer typically requires. Alright, now let's run through our example. You, the cardholder, want to buy a coffee from Sally's Coffee, our merchant. You go to the store, you swipe your card at a terminal, which is an independent sales organization, in this example Square, who then talks to the merchant acquirer, talks to the card network, and then talks to the card issuer, also known as the issuing bank. They check to see if you have funds available on your line of credit with your credit card or in your checking account with your debit card. The card issuer will then send back to the card network, the merchant acquirer, and then to the independent sales organization if you have sufficient funds. Once it's approved, you get to walk away with your coffee, and then the transfer of funds begins. The card issuer will take funds from the card holder, send it back to the network, and send it to the merchant acquirer, then to the independent sales organization, and ultimately into the merchant's bank account. Each step along the way, each one of these players takes a small fee or percentage of that transaction. Let's check out these fees. Square charges different rates depending on how the card was processed. As mentioned before, online transactions are considered more risky and therefore have a higher fee associated with them. However, on a whole, the average fee Square charges a merchant is $2.95 out of a $100 transaction, so 2.95%. In this example, the 2.95% is broken between three different groups: the interchange and assessment fee, risk CPI compliance, and Square tools and features. The first group, interchange and assessment fee, this is all three other parties combined: the card issuer, also known as the issuing bank, the card network, which is Visa, MasterCard, Discovery, etc., and the merchant acquirer. All three of these combined equal 1.86%. Next is risk and PCI compliance. This is a fee that is charged to cover fraudulent charges. For example, if your credit card was stolen and someone used it at Sally's Coffee to purchase a coffee, Sally's Coffee would still get their payment and you as a cardholder would not be liable for this payment. Therefore, a fee needs to be charged to cover these types of fraudulent transactions. Lastly, we have Square tools and features, $1 or 1% of each transaction. Ultimately, this is the money that Square gets to keep. As a shareholder, this is why I get so excited by what Square announced earlier. By allowing sellers to accept payment directly from Cash App, which is also owned by Square, they get to cut out all of the interchange and assessment fees, the $1.86 per $100 transaction, and keep it all to themselves. Now, rather than collecting 1% of every transaction, they get to collect 2.86% of every transaction if the consumer pays for their goods with Cash App. Now let's really dork out. The first thing I did is went to Square's Q2 2021 10K report. In this report, I saw that 97% of Square's revenue comes from within the United States. To make our projections simpler, we're going to assume that all of Square's revenue comes from within the United States and all Square's Cash App users are in the US. We know this isn't true, but it's going to help make our projection a lot simpler. Starting on the right hand side of the screen, we have monthly Cash App users. At the end of December 2016, there was 3 million monthly Cash App users. At the end of December 2020, we had 36 million. In this column, we have the increase in users from year to year. So between 2016 and 2017, we had 4 million additional Cash App users. Between 2017 and 18, we had an additional 8 million Cash App users. As you can see, I put a note over here that April 2018, Cash App launched in the UK. However, the UK does not make up a big percentage of these total users. Between 2019 and 2020, we can see we had 12 million additional monthly Cash App users. This was driven largely due to the pandemic. A lot of people didn't want to touch or handle cash, therefore they switched to Cash App. Now, conservatively, I am estimating between December of 2020 and September of 2021, they added 6 million additional Cash App users. I think it's going to be higher than this. However, I want to be conservative in my estimates. In the first row of the left-hand side of the screen, we have Q2 2021 seller gross payment volume. This is all of the card transactions that have happened at all of the stores that use Square terminals or all of the businesses that use Square online payment processing, which is $38.8 billion for one quarter. We multiply that by 4 to get an annual number, $155.2 billion of credit card or debit card transactions flow through Square. As we learned previously, transaction fees that go to other parties is 1.68%. Now, we take that 1.68% times the annualized gross payment volume, and we get $2.6 billion that other parties are making and getting from Square processing of credit cards. Now let's look at the US population. We got about 330 million people. As mentioned before, we estimate there's 42 million people that have Cash App and are using it on a monthly basis. That is 13% of the United States population has Cash App and is using it. We're going to make another assumption here. We're going to assume that Cash App users spend just as much as everyone else in the United States. I don't think this is true, because Cash App users tend to be younger, and younger people don't have the same disposable income as the average person in the US. However, again, we're going to keep this projection simple, and to do that, we're assuming Cash App users spend just as much as everyone else in the US. Now, let's check out if all of the Cash App users use the new payment method where they can scan a QR code at a retailer or online to pay directly from Cash App to Square sellers, therefore bypassing all the other parties' fees, and we're going to assume that Square gets to keep all of those fees. So to do that, we're going to take the $2.6 billion that go to other parties currently and multiply that by 13%. And when we do that, you can see we get $330 million annually. It's unrealistic to think all Cash App users will pay with Cash App 100% of the time at Square businesses. So let's just assume that 15% of the transactions that Square's Cash App users are done with the new payment method. That equals $49 million a year. This is a $49 million extra that Square gets for simply allowing someone to scan a QR code at merchant locations. This might not seem like a lot of money right now considering Square's evaluation. However, as you can see, there's a massive amount of potential. Right now, there's $2.6 billion going to other parties that Square has a potential to capture. And as Square continues to grow, they will have an even larger base of fees that are going to other players that are now possibly captured by allowing Square Cash App users to pay retailers with Cash App directly via a QR code. This has potential to make Square billions of dollars in the future. As Square continues to grow, they will continue to get more people on Cash App. More people on Cash App will continue to play more retailers who are using Square terminals via the QR code, therefore increasing the fees that Square gets to keep and don't go to other parties. If you made it this far, I'm assuming you liked dorking out with me. I'd appreciate if you hit the subscribe and the bell to get notifications on my next video. Thanks again for watching.